Nobody warned you last time either. Not before the 2008 crash, not before COVID flipped the economy upside down overnight, not before inflation ate through savings accounts that people spent decades building. Every single time, the signs were there. The data was public. The pattern was visible, if you knew what to look for. Most people didn't. Most people got blindsided, and most people paid for it. Here's the uncomfortable truth. Another major financial shift is already in motion, and if your money is sitting exactly where it was 2 years ago, doing exactly what it was doing 2 years ago, you are not ready for what's coming. But you can be, and that's exactly what this video is about. In the next few minutes, you're going to learn what's actually moving in the economy right now, why the old playbook isn't enough anymore, and the specific steps you can take, starting today, to get ahead of it instead of getting run over by it. This isn't doom, this isn't fear-mongering, this is pattern recognition, and the people who act on it early are the ones who come out the other side stronger than when they went in. Subscribe and hit the notification bell right now. We publish clear financial content every week, built to help you make smarter decisions before you need to, not after. Let's get into it. Number 1, understand what's actually shifting. Before you can prepare, you need to understand what you're preparing for. The era of cheap money is over. Interest rates have fundamentally repriced how debt works, how businesses grow, and how assets are valued. What worked in a zero-rate environment, loading up on leverage, chasing growth stocks, assuming real estate always climbs, carries a completely different risk profile now. On top of that, AI is reshaping entire industries faster than most career advice can keep up with. Job security that felt solid 2 years ago looks different today, and it will look even more different 2 years from now. This isn't a single event you can wait out. It's a structural shift. The ground beneath your financial plan has moved, and if the plan hasn't moved with it, you have a problem that's quietly getting bigger every month you ignore it. Number 2. Audit your financial exposure right now. The first real move is simple, and most people skip it because it's uncomfortable. You need to know exactly where you stand. Pull up every account, every debt, every monthly obligation. Map out your income sources and ask yourself, if one of them disappeared tomorrow, how long could you survive on what you have? Most financial advisors recommend 3 to 6 months of living expenses in a liquid emergency fund. In a period of economic uncertainty, 6 months is the floor, not the goal. If you're not there yet, that's the first gap to close. Next, look at your debt. High-interest debt, credit cards, personal loans, anything above 8% is a liability that compounds against you in a high-rate environment. Getting aggressive about eliminating it isn't just good practice right now, it's protection. Know your numbers, all of them, because you cannot navigate what you cannot see. Number 3, diversify like you mean it. Having your money in different stocks is not diversification. Having all your investments in one country's market is not diversification. Having your entire net worth tied to your employer through salary, stock options, and a company pension, definitely not diversification. Real diversification in 2026 means spreading across asset classes. Equities, bonds, real assets, cash equivalents. It means having geographic exposure beyond just your home market. It means your income isn't a single point of failure. If your financial situation is deeply tied to one employer, one industry, one asset class, or one currency, that's concentration risk. And concentration risk is manageable when things are stable. When things shift, it's devastating. If you're getting value from this, subscribe and hit the bell. We go this deep every single week, and you don't want to miss what's coming next. Start with your portfolio, then look at your income, then look at your skills. Diversification isn't just a money strategy, it's a career strategy and a life strategy, and the most prepared people have multiple streams, multiple assets, and multiple options. Number 4, build skills that are shift-proof. Your income is your most powerful financial asset, not your investments, not your savings. Your ability to earn consistently, adaptively, across changing conditions is what funds everything else. which means the question you need to ask yourself isn't just, is my portfolio ready? It's, am I ready? In a world where AI is automating entire job functions, the people who stay economically resilient are the ones who develop skills that compound: communication, critical thinking, sales, technical fluency, creative problem solving, things that are hard to automate, things that get more valuable as the landscape shifts around them. This is the year to invest in yourself as aggressively as you invest in your index funds. Take the course, build the side income, start the thing you've been putting off. Because when the next wave hits, the people with adaptable skills don't just survive, they find opportunity inside the chaos. Number 5, stop waiting for the perfect moment. The people who got crushed in every major financial downturn had one thing in common: they kept waiting. Waiting to pay off the debt, waiting to build the emergency fund, waiting to rebalance the portfolio, waiting for things to calm down before they made a move. Things don't calm down first. You get ready first, and then you handle whatever comes with clarity instead of panic. You don't need a perfect plan. You need a plan that's better than what you have right now, executed starting today. One step, one decision, one account opened, one debt attacked, one automatic transfer set up. The gap between prepared and unprepared isn't intelligence, it's timing. And the timing that matters most is always the same: before you need it. The shift is already happening. You've known that since the first 10 seconds of this video. The question was never whether something was coming. The question was whether you'd be ready when it arrived. Now you have the roadmap. Audit your exposure, kill the high-interest debt, diversify across assets and income, invest in your skills, and stop waiting for a perfect moment that was never coming anyway. The people on the right side of every financial shift didn't have a crystal ball. They just moved earlier than everyone else. That can be you. If this video gave you something to act on, do 2 things right now. Like it so more people find it when they need it, and drop a comment below telling us what's the one financial move you're making this year to get ahead of what's coming. We read every single one. And if you haven't subscribed yet, do it now. New videos every week, no fluff, no noise, just the financial clarity you need to stay ahead. We'll see you in the next one.